Yeah, I don't think that I can, like, we've definitely had like an up market, but I don't think I can call that a bull market and now we're back down. I think we just haven't started the largest crypto bull market of all time yet. So I bought my first Bitcoin on Coinbase. It was November 2013. I think I paid $400, maybe $12 or something like that. I could look it up in my Coinbase history, for my first Bitcoin. People are like, $400. And what they don't realize is that between 2015 and 2016, Bitcoin was between like $200 and $400 for 2 years. It was this like abysmal bear market where like nothing was going on. There were no investable founders. I think this was like November 2016. It was an ICO that sold out in about, I want to say something like 5 minutes or something, like just single digit minutes, and raised over, I believe it was like something like $10 million worth of capital, which at the time seemed just like, how can you even form capital with such haste, right? When 2018 came, there was a sharp sell-off. The bull market was over. We went into a 2-year, we called it bear winter, right? It was like up until that point, it was one of the most abysmal, depressing periods. I remember in the early innings of 2018, sitting with some of our co-fund folks and just being like, man, maybe the SEC is just gonna like shut this whole thing down and we'll just have to go get jobs, right? And like, sure. I mean, like, how much detail do you want? So I'm Jake.
As much
Brukhman.
as you like.
I'm the founder and CEO of Coinfund. Coinfund was sort of my idea. The logo of Coinfund is something that I designed, right? So I can really claim kind of that spiritual founding of the brand. But basically, like, my story is I was and am a technologist, and I always had an interest in finance as well. So, early days, I used to work in the high frequency trading industry. Then I worked at hedge funds. I got kind of sick of Wall Street, went and ran a proper technology team at Amazon. I was a technical product manager and engineer. And then I left Amazon to be like kind of like an entrepreneur, but didn't found that company. I came in as a partner and CTO to sort of a fintech alternative data firm where we would reconstruct the business models of private technology companies and then sell that data, to people who are doing like M&A and hedge funds that were anticipating that like Uber would go public soon. And really, it was like during that period that I kind of learned about blockchain. So I had a friend in Brooklyn in April of 2011 who was like, hey, check it out. They made like digital money, right?
That's super early.
It was very early. And I kind of like totally didn't even get it at the time. And I sort of like downloaded the Bitcoin client. I tried it on my laptop. My laptop like overheated. I was like, what is this crap? I think he sent me like half a Bitcoin. Like, I think Bitcoin was around $30 or something, like right before it dipped back down to like 2. And what really got me into the space, into Bitcoin subsequently, was that I used to work at a hedge fund where someone on the quant team did a one-pager about how Bitcoin actually works. And that was like the light bulb moment for me. I was like, wait a minute, this is like really interesting tech.
Yeah.
And then I read Vitalik's white paper, essentially. I like I've told this story a lot on podcasts, but I read the Vitalik's white paper. I put it down. I looked at the wall for 30 minutes, and I was like, yep, like digital assets are going to be a new asset class. So Coinfund is the manifestation of my essentially bet that digital assets would be a new asset class, that blockchains are not just about currency, but they're really about decentralization technology. And I mean, there's a lot more details that could fill in there, but let me pause there.
No, I guess like what gave you the, conviction to start a fund, especially in 2015 when Coinfund founded? Because at that time prior, you had Bitcoin, and then there was some things going around with colored coins, trying to make Bitcoin a little bit more programmable. And I think it was like 2014, the white paper for Ethereum came out. And was it that was like, all right, let's see what we can do here?
Well, I think for me it was a combination of factors. So one is like I've always had an entrepreneurial itch, but how do you become an entrepreneur? Like I never went to school to become an entrepreneur. So it was always like trying to think about like, hey, if I were to start a business, like what business would it be? I had a few like early run kind of startup experiments. Like me and my friend Nick Yakovenko is actually a founder in crypto today. We had like an early 2013 era startup where we were doing machine learning on brain data. So we're trying to think about like, hey, could we read like people's sentiment about
doing
movies?
some early Neuralink
Totally. I just found the video of that product like the other day. It was wild. And then, so that was like one prong. And then like the other prong is I was always like very interested in investing. Like I always knew kind of from school and from the fact that like my parents worked on Wall Street for many years, like when I make some money, like I want to invest it. And to me, stocks seemed like really freaking boring. I tried to, back in like 2005, 2006, I tried to go into like peer-to-peer lending because that seemed like a more new, crazy thing. And so when I saw crypto, this was like the perfect combination of technology and finance, on the intersection of which I have always worked and my interests kind of were always there. And I was like, wow, here's a new asset class. Here's something that could be really, really big and impactful. It is like tech all the way down, which I love. And it is going to like transform finance, and look at all these other applications that it could potentially have. So that's what really was like, got me to say like, I really want to work in crypto full time. And I realized that vision in April of 2016.
I'm super curious because now there's relatively-ish like a standard playbook for getting either a crypto hedge fund or a venture fund off the ground. But in 2015, I'm sure that was much more difficult, even going out and raising a venture fund for going out talking with limited partners saying, hey, there's this new thing, blockchain technology. There's this thing called Ethereum. There's smart contracts. How was that process?
So absolutely wild, right? Like, so first of all, Coinfund's official track record begins on July 1st, 2015. So that was actually before I went like fully full time on it. It was a bit of a side project to begin with. In fact, at Coinfund, we have this like early email that I have to one of my like, he was the first non-Brukhman investor in the project, my friend Yashar. And it's like from, I don't know, like June of 2015 or something. And it's like, hey, Yashar, I'm working on a side project. Like, here's the white paper or whatever. Anyway, so there was no market for digital asset investing from an LP perspective at all, because digital assets were not an asset class. That was not a consensus view, right? There were definitely a few players. There were like individual, high net worth individuals, crypto people investing in stuff. There was a few, like to Pantera's credit, they had one of the earliest like Bitcoin funds. I think that was in 2013. The cyber fund guys who I mentioned right before we started taping, who are still around as cyber fund, they were there in 2013. So there's like a few folks, but by and large, it was you're selling a dream to an empty audience who's not like listening to you, is not even there, and you're sort of screaming and saying like, hey, this might be like really interesting, really big, but there's no money anywhere, right? So like it was a huge hurdle, and it took some maturation and price movements of the space for people to finally like start sharpening their pencils.
Maybe talk about that, because I'm super interested in people that have just gone through kind of the cycles, the booms, the busts. I feel like there's always euphoria generally at some point, at least historically, and then these periods of very drawn out bear markets, players collapse, people get over leveraged. It's very painful. And like maybe talking about like 2017 and the ICO era being front and center to that.
Yeah. So, when people ask me like, okay, when did you buy your first Bitcoin? Right. So I would say, I tell them, so I bought my first Bitcoin on Coinbase. It was November 2013. It was on that upslope to 1,200. I think I paid $400, maybe $12 or something like that. I could look it up in my Coinbase history, for my first Bitcoin. People are like, oh, $400. And what they don't realize is that between 2015 and 2016, Bitcoin was between like $200 and $400 for 2 years. It was this like abysmal bear market where like nothing was going on. There were no investable founders. There were a bunch of Bitcoin companies that had made the bet and got VC investment to the effect that Bitcoin would be a new form of money, and they completely had gone out of business at that point. So it seemed like a total failure. And in that bear market of 2015, there was sort of this inkling that Ethereum would launch. In fact, as I said, Coinfund was July 1st, 2015. Ethereum launched the next to last day of that month, which was July 30th. So we have this spiritual kind of connection.
Same birthday month.
That's right. And also we mined some of the first blocks on Ethereum Frontier as Coinfund, and we inscribed them, and we can find them and dig them up. But so like it was just sort of a wild market to even be making that bet, because there was no inkling that anything would happen. And a lot of newspaper headlines were being written to the effect that like, okay, look, Bitcoin's now totally dead. Toward the end of 2016, we started to see an ICO phenomenon. And, one of the things that launched was the first ICO on Ethereum, which was Augur prediction market, which are now cool again in 2024. Yes. And then, the one that really stands out in memory was DigiXDAO, because I think this was like November 2016. It was an ICO that sold out in about, I want to say something like 5 minutes or something, like just single digit minutes, and raised over, I believe it was like something like $10 million worth of capital, which at the time seemed just like, how can you even form capital with such haste, right? And that's when people started to pay attention. That's when the prices started like moving up. And by the time we were in early innings of 2017, we were like in a bull market mode, and there was a lot of interest kind of conglomerating toward the space from founders.
And it was kind of it got even crazier throughout the year. I kind of came in personally towards the latter half of the year and got into, I think, Ether for the first time around like 700, and quickly learned I was not the genius that I thought I was probably 6 months later. But I guess what were some of the learning lessons? Kind of, there was a lot of excitement. The new ways of capital formation ultimately spurred a lot of interest, not only from investors, but for builders to be able to experiment with these different things. But we got ultimately some cool things funded from 2017, but 2018, 2019 was really, I'd say, kind of like the inklings or seeds for what was then kind of like DeFi summer.
Yeah. Sorry, so what's your question?
I guess like, so you had like 2016, 2017, the run up.
Yes.
I guess like how was like Coinfund, what were some of the learning lessons through that first like really big boom period that like you carried throughout like 2018, 2019?
So 2017 was this sort of like sharp focusing of attention on the space, sharp increase in pricing, sharp increase in probably like regulatory scrutiny to some extent too, because the SEC was already looking at projects like the DAO, which had come the previous year. So they were already like doing some work on like what's going on in this industry and space. I think, Logan, the reality was that a lot of people raised money for projects that truthfully couldn't really come to market. And that's because the kind of the infrastructure of blockchain just was not mature. It was just not there. Like, that was one thing. Another thing is like every founder, they had to find a way of putting a token into their offering so they could do an ICO, could raise money, etc. And of course, that created a market of what we in retrospect call utility tokens, which are tokens that you have to pay to a network to get sort of the service of that network. Now that turned out to be just like a terrible, terrible idea, because it creates a friction for consumers and normal users. Like, You have to have a wallet, you have to have Ether, you have to have this token, you have to pay this token for like there was just so much friction there that just on that property alone, like thinking critically with hindsight, like we probably couldn't have launched most of those products. And then there was also like ridiculous stuff going on. There was champagne on the blockchain, there was mom coin, there was dental coin, there was this, there was that.
Dental coin had a pretty good market cap for a while.
Right. And so when 2018 came, there was a sharp sell-off. The bull market was over. We went into a 2-year, we called it bear winter, right? It was like up until that point, it was one of the most abysmal, depressing periods. I remember in the early innings of 2018, sitting with some of our Coinfund folks and just being like, man, maybe the SEC is just going to like shut this whole thing down and we'll just have to go get jobs, right? And like that did not happen, thankfully. And actually in that period, we raised our first sort of quote unquote real LP fund. That was in March. That was our second seed fund. And we made some of our most important investments. Like we just by being around and sort of being like, I know this looks really bad and this is like not a good environment and it keeps going lower. But if we sort of double down on our conviction that longer term this will be something and we'll come back and will work, then arguably some of the most important investments that we made in that period were that's when it happened, right? And then when 2020 came around and we got through, the coronavirus crash and things started looking up, like some of those investments just kind of like made Coinfund what it is today, right? One example is like Block Daemon, right? This is a deal I think we did in 2018 at like $15 million valuation. It's a multi-billion-dollar company now. It's probably one on the list of companies that could IPO, since Coinbase IPO'd, and just incredible kind of growth there from that period, and many, many, many other projects that are still relevant or their areas are still relevant today.
We could probably talk for hours on just like the history of Coinfund and like lessons learned. I definitely would find it super interesting, but maybe to fast forward today, I think one thing that you are uniquely focused on as an engineer and also as an investor is just this oversection or cross-section of AI and crypto.
Yep.
You guys have been writing about this for numerous years now. Can you kind of share more of your thoughts just about the intersections of crypto and AI?
Absolutely. It's now more kind of hip to say decentralized AI,
Okay.
which I'm fine with. We definitely started that journey probably at the end of 2020 with our investment in WorldCoin, and then continued that journey with a very speculative early investment in March of 22 into a company called Jensen AI, which is working on kind of compute aggregation and decentralized training. And Rishan Sharma, one of our analysts, and I, in September of 22, we published kind of our thesis on open neural networks. We said, look, there's a tech stack here. There's a few things that you want to do in this tech stack. You want to aggregate compute, you want to train models, and you want to do inference on those models, and you want to productize them. And all of that can be done with Web3 primitives. Now, why do you want to do it that way? Well, because the pipeline that creates AI products, like this tech stack, plus the talent, plus the distribution that we have today, is all owned by just a few big tech companies, most of which are located on the west coast of the United States. And I think pretty much everyone in Web3 uniformly agrees that that is not a great setup for democracy, for language, for culture, for different cultures who might require an LLM that is just closer to where they are and emotionally and vocationally and so on. And so everyone kind of is seeing right now a proliferation of AI models. Just like in the beginning, some people had said, oh, there's only going to be one blockchain, and yet we've seen this enormous proliferation of blockchains. Same thing is happening in AI. And so to me, what is decentralized AI? It is applying Web3 primitives, like decentralized networks for computation, token incentives, storage networks, like things like this, like very deep tech focused kind of machinery to democratize that pipeline, to make it easy for people to compute their own model inference, for making it easy to train a model, right? Now, on this topic, I actually want to spend like 30 seconds on this, because even right now, as we sit here in end of July of 2024, it is consensus that decentralized training is just not something that's interesting. Why would you want to do that?
I saw your tweet on this recently.
It's so slow and it's never going to work. And all the big tech companies have, won already, and they have all the compute and et cetera. And like, I could not disagree with this more, right? So I think like we've recently made some investments with founders who are, exceptionally qualified. They're PhDs in AI. And what they're showing is that there's very clearly like research that exists today that shows like, look, you can actually take a step back. You can re-architect strategies for fitting models in a decentralization context. And you can actually truly start to build networks that are bigger, more open, and in fact more monetizable for various reasons than the way that we do it now, even with our open models from like Facebook and stuff. We could do it better, and we could do it more aligned with Web3 openness.
So maybe to dive deeper into that and break apart kind of those core three things, the training of the model. Historically, those GPUs have been co-located in a data center. Then you have the inference once the model is built, kind of getting a request from the model, and then kind of the data itself for the model. I guess like I definitely see the case for data and inference in my mind being kind of like edge computing. We're in Miami. We have blockchain infrastructure that ultimately is able to co-locate in Miami, and you run inference requests. I guess perhaps being closer to the metal on the training side, is it just like you're speaking with the entrepreneurs that get you excited about either research breakthroughs, or is it just that over time, as these models perhaps shrink or get more specialized, they will work in like a decentralized context?
I think it's a conglomeration thing. So first of all, yes, it's speaking with entrepreneurs who are kind of like interested in this topic, and them, basically like demonstrating that, look, here are some promising like research directions that already exist that we just need to sort of implement to do this. Now, you might ask, okay, why do you want to do this? Well, first of all, compute is said to be very scarce, but I think that is like a point in time type of measurement. And the reality is that it's very scarce, and the production of compute is currently at like all-time highs. Companies are building like nuclear power plants to power, GPU data centers. I think the reality of compute is that it will flood the market and actually be very cheap in a few years, right? So that's like one thing to say. If you actually want to outbuild the big tech companies in training a large model, what you need to do is you need to like aggregate enough compute to be competitive with them, and they can buy a lot of compute. And yet we know from Bitcoin, which is the largest supercomputer in the world, that we can in fact aggregate using crypto and blockchain technologies. We can aggregate a lot of compute. And so let me paint you a picture of sort of the end state of decentralized training. I think we will have really large networks that will have aggregated compute. That compute will be heterogeneous commodity hardware, not necessarily high-end hardware, which, by the way, if you just solve that problem of like being able to train models on commodity hardware, that already like does so much to spread AI like further around the world, and that in itself is valuable.
So these are like the M1, M2, M3 on MacBook Pros and like
Pros,
3080s, 4080s.
But really like any hardware. Like I've talked to teams that say like, hey, you could have a cluster where you could have like a mid-range GPU, like an array of mid-range GPUs here, an array of like high-end GPUs, an array of low-end GPUs, and all of these will help train your model as long as the architecture is, amenable to that. And so really large networks that can actually aggregate more compute than, let's say, Google, where you can form capital for training in a crypto native way, which we've seen, like starting with the ICO boom of 2017, we just discussed. This is one of the bread and butters of crypto. No one aggregates capital better than crypto. And finally, like there's some people who argue that training is not that valuable because like all the most people are just hitting the inference. Well, the interesting thing about these networks is that they're going to be training some of the largest models in the world. Those models are going to be sharded across the people who train them. And if they're sharded across the people who train them, those weights might actually be proprietary to those people, to the trainers. And in order to perform inference on such a network, you actually have to go back to the people who trained it. And so it actually has commercial viability in the sense of being closed weight, but these networks are open in a different sense. Like they're closed in the sense of weights, but they're open in the sense of setup. Like when we talk about open models from Llama 3 from Meta, right? Yeah, we know the weights, but we have no idea what data it's trained on. We have no idea what hardware it's trained on. We have no idea the training setup, right? Now, if you open source that aspect of it, then that actually creates the ability of people to come in and fork your setup and create, a marginally better model, through the same network. So I think like once we demonstrate, which will probably be in the next 2 years, once we demonstrate that a large network like this can train a competitive model to something like a GPT, 4 or Llama 3.1, it's going to be a very different conversation of what is consensus around decentralized training.
Yeah. I mean, maybe wrapping it back to the product side, I mean, all of this is ultimately to facilitate kind of AI that anybody has access to that can be customized towards whatever liking that you want. And it's not a woke model or a conservative model, whatever flavor you want it or don't want it.
Or even more fundamentally, like the way I think about it is, if I'm a scientist and I want to try an experiment with a large scale LLM, I don't have to work at Facebook or Google or OpenAI to do that experiment. I can go present my idea and its merits. I can form capital and I could do the training on these open networks.
It would be fascinating. I mean, it's very interesting just how ultimately these will intersect over time. You mentioned though, Coinfund was an early investor in Jensen, but at that time it was much more speculative. Mm-hmm. Could you maybe talk a little bit more about that story? Because I do think Jensen is probably one of the leading teams right now in decentralized neural network training.
Well, I think there's a bit of like a cultural divide, like everywhere between Web 2 and Web 3. There's a cultural divide between kind of traditional AI people that are very associated with Web 2 and Web 3 entrepreneurs who are like venturing into AI and building products there. And, they have slightly different values, right? Like the Web 3 people have they like self-sovereign data. They like open source. The traditional AI people, they defer a lot more to institutions. They're like, where did you get your AI PhD? What professor did you work with? What company lab did you mature under, right? Like, was it Google? And this kind of stuff matters. And I agree. Like, the people who truly, deeply understand AI the best are the ones who have this kind of more institutional, traditional training. But if Web3 is ever going to become a thing, and by extension, if AI Web3 is going to become a thing, we need to bridge that gap. So if you look at how we've invested in the space, it's definitely like investing in people who are like on the other side of the river, and we're trying to get them closer to Web3 primitives, or they have already recognized that themselves. So, WorldCoin, Sam Altman's project, Jensen AI, you have, Harry and Ben, who are just like, have incredible pedigree like in the AI world. Bidan at Bagel Network. We have a bunch of other examples we can draw. But it is when those AI people, when they realize the value of these Web3 primitives, that's, I think, when the most interesting synergies occur. And that's when we can start getting closer together to the traditional AI world.
Yeah, I've been seeing this across like the decentralized physical infrastructure networks as well. It's more, to your point, these industry experts in their certain domain starting to realize they can potentially leverage kind of the coordination of a blockchain to enhance their product than like crypto native saying, hey, I'm going to go become an expert in telecom or whatever it may be. And to me, it's super exciting because you have these people that have really thought deeply about this project, and they just are either stumbling or slowly realizing that crypto actually can turbocharge this.
Yeah, absolutely. So I have my AI PhD founder who's working on decentralized training, and his, the way he tells the story is he's like, I go to one of my former colleagues from the big tech company who has an AI PhD like me, and I start to talk to them about like decentralized training, and their first reaction is like, why are we talking about this is stupid. Like, then I show them a couple of research papers that are replacing backpropagation with other algorithms that are more parallel, and they're like, oh, okay, well, they go from like this is silly to like, yeah, I guess that could work, right? And then I show them a few other papers and like show them how you could put it all together, and then they get really excited and want to quit big tech and join, my startup. So that's the process that is just starting now that I think will be happening at scale like in a few years.
So I guess for founders that would be interested in talking with Coinfund, are you like more excited about training or inference or data, or is it just like training eventually will happen on blockchains and it's just kind of a thing to call out?
I'm excited about all of those things, but for different reasons. And I'm also like eyes wide open about their timeframes, right? So for example, decentralized inference is something that is very understandable and accessible to a lot of teams. And so you see like, I would say, 100 projects right in that area, and everyone's going after a similar strategy of inference. But if you look in decentralized training, you can count the number of companies on one hand in decentralized training.
How much of this is also just a part of being a investor that has played the game for a while and also learning to go where people are not? Or is it more just like, this is possible, I realize that it's possible before others, and I'm going to make bets there?
Well, if I'm going to sort of sell Coinfund, through this lens, it would just be like, we take a deep interest in the bottom up functionality of the technology that we're studying, right? And so it's not so much about like predicting the future, it's more about like being able to turn kind of a deeper understanding or insight into better foresight, into better guessing or making an educated guess about how this might play out. And so a lot of like on the decentralized training thing, like my experience is just that people have this, if you know the term, like availability cascade. But anyway, I just mean that like people tend to parrot that trope a lot, that like, decentralized training is slow, it's not worth looking at. But anyone who's actually gone like 14 levels deep into decentralized training will be like, you can do this if you expend enough effort. Now the question is like, should you? Will you? Can you find funding for that? Who's going to fund that? Who's going to believe you? Like Silicon Valley is pushing back, and so there's a certain like contrarian view to that, right? But the whole thing about investing is, if you're contrarian and right, you win. So that's
100%.
Kind of how I think about it. I want to be contrarian and right about decentralized training.
There we go. Maybe shifting a little bit, I think it's been interesting as a new fund manager kind of coming into the space probably late 2023. You kind of had a little bit of the hangover subside from FTX, from Luna in 2023. Valuations were kind of, in my perspective, a little bit more in line. And then as liquid markets start to get more exciting during as things pick back up. So do the venture markets. Generally, founders have high expectations as well. What have you kind of found just today in terms of like the venture markets and how they are?
Like the venture markets for companies or venture markets for funds?
Venture market for funds. Like
Funds.
As an investor, how have you kind of found the current market? Because now there's also calls from there's too many venture funds. We should have more liquid funds
Yep.
to be buying tokens.
Yep. So 2022 was a devastating year for crypto fund managers in general, and especially like emerging managers. And of course, that's because of all the debacles we saw that year. Luna, BlockFi, FTX, was the camel that broke the whatever, right? And so 2023 was actually a year where a lot of people like who were going to go into fund management, I think they saw opportunity in the space. Like I went to, East Denver at the beginning of 2023, and I remember like bumping into like a lot of emerging early stage managers who were looking at pre-seed and seed companies in crypto. And overall, that's a great signal, right? Like if you have a lot of early stage people, they're sort of betting on the fact that this is going to grow a lot over the course of the next few years. But what those managers, I think, found was a market where like professional LPs are just like not writing checks in the aftermath of 2022 in crypto and also the macro environment. And so, I think 23 was a very, very tough year to raise money, just across the board, especially for emerging managers, but also like if you look at some of the fundraising that have happened in larger funds, like, people would raise funds at 30% size to what they did before. It was like reflecting the fact that the market has cooled off. I think there's a few managers toward the end of 23 and early 24, you, Logan, being one of them. And I know a few others who actually were finally able to raise money, and congratulations on that. But I know how hard it was.
I guess, yeah, it's super painful in terms of like when you guys start to see valuations rise. I think this kind of happened in 2021 towards the latter half. I'm sure it happened in 2017. How are you guys just work with founders? Are you going in different areas that people don't look? How are you guys kind of viewing that from like a coin fund perspective?
So we have a lot of debates about, like we're generally like quite valuation disciplined, both relative to traditional markets for tech companies and for crypto markets. But we often have the debate of like, how big does something have to purport to be for like for us to accept like a higher valuation? I would say like in our last seed fund, which we launched in ECC Paris 2023, that fund has done well on valuation discipline. So it's been mostly seed. It's been mostly kind of seed valuations in the range of like 15 to, maybe like 30, $35 million. We have led or co-led every deal. I think there's about 8 deals in there. We've been winning kind of bigger ownership because we're positioning as lead, or we're positioning as someone who is really helpful to teams, and we do work, very, very actively with our portfolio companies. We can talk about that. And so it's been quite valuation disciplined. On the other hand, there's definitely certain areas, and these areas are mostly in sort of deep tech and infra in this year in 2024, that have seen just like incredible valuation. I mean, we've seen AI, Web3 companies kind of go out at hundreds of million type of valuations in their rounds. We've seen high throughput blockchains do well. We've seen parallelized EVM projects do well. So there's definitely like pockets where things get pretty crazy. And honestly, like we we sometimes get over that hump if we like we did, Matter Labs, for example, at around that was later stage than we would like normally do. Well, we got comfortable with that kind of valuation for it, just because we think the opportunity for ZK Rollups is like so big. So we do get there like on certain things, but for the most part, we're company builders. Like we want to be there like early. We want to help them, and we want to kind of collect a return associated with taking on that kind of journey.
And part of that, like being helpful, Coinfund's been around for a really long time. You guys have a great reputation in the space as being helpful to founders. How do you cultivate those relationships with engineers, not even like after investment, but even prior to investment, making sure you're staying on top with the smartest people in the industry?
Well, in the beginning of the pod, you asked me like, how did I get into this space? Like my earliest inclination back in 2015 was like, hey, should I become a crypto founder? I'm a tech guy, I'm an engineer, I would be a good fit for a CEO or a CTO of a startup, right? And where I sort of got to was like, no, I should do a fund because it's so early and this technology has to mature so much that if I start one startup now, like it's almost guaranteed that it's going to be like obsoleted like later. But if I start a fund, then I can be alongside maybe 100 founders who are trying to solve those kinds of problems. And so, like when I personally work with founders, it's usually along the lines of technology. It's kind of like going deeper, like understanding functionally what their networks are doing. It's also like founders are very focused on what they're building and what their kind of competitors are building and what their companies that are in synergy with them are building, but they're not focused on like the technology that they're not thinking about that's going to come through here like a train and derail everything, right? And as an investor, you get kind of this higher level view where you can advise people on that. You can kind of keep an eye out for your portfolio companies. And then just to say a little bit about Coinfund more broadly, like philosophically, that early desire to be next to company builders, to CEOs, has translated into a post-investment discipline at Coinfund now, right? What does that mean? It means that our journey with a company like really begins at the moment that they enter the portfolio, right? There's this huge process of like finding them, doing due diligence, taking them to IC, winning the deal, etc. But the journey really starts like when they go in, and our view is like we want to give companies this like 5 to 10 year horizon to achieve success. Doesn't matter if you're a centralized company, decentralized network, token, like whatever it is. And so how do we work with them? They have access to, in Coinfund, to a 30-person firm that will work with them on every vertical of problem that they have. So it's like cryptonative problems. How do I design a token? How do I, structure a foundation in the Cayman Islands, whatever it is, to very standard and dry startup problems. How do I hire? How do I have a kind of an intra-company process that's robust and makes my organization strong? It could be like, hey, can I talk to Senator Loomis in Washington, D.C. about policy, right? Like all that kind of every vertical of problem, there's someone at Coinfund who can help you with that. Jenna Pilgrim is our head of platform. She's very visible because
she's great.
Yep, you know her because she's out in the field working with her companies all the time. Jules Mosler is our head of comms and marketing, who helps her companies with announcements. Margaret Gabriel, our head of people, helps companies hire, build robust processes. All the managing partners at Coinfund, work with the deals that they do, and so on and so forth. And so, the best way, you don't have to take my word for it. Like, the beauty of this is that all you have to do is go to talk to a company in our portfolio and just ask them, how have you worked with Coinfund, and what have they done for you? And we tend to get great reviews on that, and there's no substitute for that kind of marketing.
Yeah. Founder feedback and personal endorsements, so to speak, are invaluable. I maybe on the flip side, what are things that either you or the fund? I always like. I feel like I'm my biggest critic, and there's many things that I can do to personally improve. Is there anything that you feel like you or like Coinfund like want to continue to iterate on or get better, either personally or at the fund level?
Always, always, always. So like, one thing we're constantly thinking about is our investment process and how that process works. I think our process over the last 2 years, has really gelled. We designed it with the help of David Packman, who is an extremely experienced VC. When someone joins the Coinfund investment team, they are doing that first and foremost because investing is an apprenticeship vocation. You do it by doing it, and you become good at it by being next to people who are good at it. So like the number one thing is constantly like learning how to be a better and better and better investor by doing that and being next to good people. And then secondarily being a great investor like in this particular frontier technology. So that's something we're always improving. The post-investment process, we're constantly improving. Like Jenna recently put together kind of a vendor platform where our portfolio companies can go get things like, third-party vendors, AWS credits, Google Cloud, this kind of thing. But it's all packaged for them in an awesome, SaaS that they could use.
On the like being a better investment or a better investor, I totally agree. It's just something that you have to do. What are some lessons that you've kind of just learned from running Coinfund? Because I think you have tremendous wisdom from being one of the first fund managers in the entire space. I'm sure lots of ups and downs. What are some like big takeaways? Has it been like just continuously underwriting it? Has been going deeper in like what are large markets? Is it more, hey, there's a special gut feeling with this founder, they're brilliant? Any like unique call outs?
I think I would sell Coinfund in a few different areas. Like I would say, so first of all, we're probably like more technical on average than the average like crypto fund person. And that has just helped to be early and right. We are probably more institutional. So there's something to be said for being able to convert professional LPs. That means you have to have a certain level of process and like discipline. And that usually means like running a larger org, and like running a larger org carries with it some kind of innate authority as well, whether or not it's deserved just by virtue of being like bigger. It also means there's more capital because of that professional LP process. And so we can write like bigger checks, we could lead more. I think like in terms of lessons about the subject matter itself is, first of all, crypto is obviously very, very cyclical, and success in crypto to me means taking a very long-term view with high conviction on what we're all doing here. And if you can't do that, then what are we doing here? So like part of the longevity of Coinfund is due to the fact that like betting on the long term and just weathering a few very difficult periods, frankly, of which this particular period is one of them, right? We've been in a 2-year kind of depressing bear market that's still waiting to resolve, probably around election time and so on. But it shows when you talk to founders, people are exhausted. People are, some people have dropped off and so on. So I think that like being able to like emotionally navigate the cycles is very important. I think one thing we've done well is we've selected companies that we've sort of due diligence from the ground up rather than looking for external signal. Just being original in terms of your due diligence, I think, is a alpha generator, because some of those companies have grown into just tremendous projects, and it was not obvious, in the beginning. And the fact that we were participants there probably helped them get to where they are today. So like we don't do a lot of pre-seeds. We do a few, but there's a few pre-seeds that I'm like super excited about, because I'm like, I know I can add a lot of value in helping to build this company. And that's ultimately what I'm here to do. And And then I think we learned a lot of lessons around how to structure fund products too.
There's a lot of alpha and structure.
Yeah. Like early on, we had a kind of a hybrid fund, which some crypto managers still do today. But our second fund was kind of a hedge fund with venture side pockets. And and of course it was in a certain era. It was in like the 2018 era. And what we learned at that time was like very difficult to raise money for such a thing, because when you would go to, a hedge fund of funds, they'd be like, you're too much like a venture fund. And like when you go to venture fund of funds, they're like, you're too much like a hedge fund. And so what I think we did well was we split out our strategies a little bit into separate funds that on their own look a little bit more standard. And so we have a seed fund program, we have a venture fund program, we have a liquid fund program, and those are just a lot more coherent products.
So to that point, what do you think of the current rumblings in the market that there are too many venture funds historically, because you could do either infrastructure deals or get very early tokens, and then these things would come out at multi-billion FTVs, and there's not enough liquid funds to buy these tokens?
I mean, our first fund was just like, we're like, let's just design the most futuristic looking, crypto investment vehicle. It was an experiment, and it was essentially like a liquid fund, right? So, and then our second fund was like a hybrid, right? So we're like, and we have a liquid fund today. So I'm not without experience in those, in how those funds work and what they kind of do. But what do we actually see in the market, right? We see, in traditional tech, we see this long time to liquidity, 10 years to IPO, something like that, 8 to 10 years. And by the way, that IPO window at that time was also like extending dramatically. Then we go into like ICO era, and suddenly time to liquidity is like 0. You send them the money, and then like a week later you have you're trading on a DEX or something, or an exchange at that time. And so at that moment it seemed a lot more feasible to do a liquid fund, and it seemed more sensible to do the liquid fund. What people quickly found out was like, that's not actually like a good set of incentives for humans. Like there's probably like a sweet spot in between the 10 years and the 0 where projects will get built better. And so like the middle 90% of deals that crypto funds do today, what do they look like? They look like an equity deal. This is also sometimes important because in an equity deal, you can get governance in a company. And after FTX in November of 22, that became a lot more important to investors and LPs, just to have a little bit more oversight. And then together with that equity, you get like some kind of promise of token. So I don't actually see right now the market reverting to just 0 time to liquidity and everything is liquid assets. On the contrary, I see it converging onto something which is a compromise. Now the question is like, what's the best kind of fund to take advantage of that? I would argue it's still a venture fund. Well, because you can create more DPI in a crypto fund than you can create in any sort of traditional venture format on average, right? So you're like using the disruptive qualities of this liquid asset class, but in like a venture format where, you have 10 years to achieve success. So I still think that's a really good format, but we also run a liquid fund too. So we'll see.
Both strategies, but they're still alpha and venture funds.
Yes.
Maybe
I don't think venture funds are going away.
Okay,
Like, let me just put it that way.
I like that. I mean, so we're a little bit over halfway of 2024. How are you feeling about kind of the rest of the year and kind of coming into 2025? We kind of have a little bit more of a potentially promising regulatory regime, which would be great just to understand the rules that not make them super opaque. But outside of that, we also kind of have infrastructure, in my opinion, kind of maturing to the point where you can actually build applications at scale and move up the stack. How are you feeling now having played the game for a long time, seen these ups and downs, how are you feeling just today?
So again, I'm feeling like we're in a very long bear market. So I'm a little bit tired. I'm not tired, so tired that I'm gonna like call it. But I do want to see us sort of resolve this. I think that we only have a few months left. I think the election is going to be a huge point of resolution about where crypto is going, at least in the U.S., and that will be an indicator for other markets as well. Out of all of the things that happened, I like the tech side that you mentioned the most. Like, we are more positioned than ever before to create essentially like Web 2 equivalent apps. And my mental model on this, Logan, is like, do you know how many iOS apps hit new iOS apps hit the market every month? Do you have a sense?
I'm sure tens of thousands, hundreds.
Tens of thousands. It's about 40 or 39,000 last I checked. The Google Play Store has about 50,000. So you're talking like approximately 100,000 new applications hit people's phones around the world every month. And out of that 100,000, there's like a few that are good, that are growing, that generate revenue, that become bigger, that are useful, etc. How many crypto apps are we producing per month? Is it 10? Is it 20?
It's definitely not in the thousands.
It's definitely not 100,000, right? So like, where I want the space to be, obviously over time, is I want us to be producing tens or hundreds of thousands of decentralized applications every month, of which a few will be creating like major impact. So I think we're just at the start of that journey.
And you still think even prior or up until this point in 2024, we've still kind of been in a bear market?
Yeah, I don't think that I can, like, we've definitely had like an up market, but I don't think I can call that a bull market and now we're back down. I think we just haven't started the largest crypto bull market of all time yet.
I like that. I guess obviously you're very deep in the weeds in AI and crypto. Are there any other pockets of the market that you have uniquely kind of like get you excited? I know applications more broadly, but anything else outside of like the crypto AI intersection?
Totally. I'm wearing my Sindri hat. Sindri is a portfolio company that's doing basically zero knowledge circuit lifecycle management, if you want to put it that way, and proving. I really like their team. I really like what they're doing. Their thesis is, look at this, like all of the real world applications of zero knowledge are currently in blockchains. It's like storage proofs, it's zero knowledge rollups, it's scalability, it's interoperability. There's like so many different ways that you could apply zero knowledge in blockchain. And that's before you even get to like the privacy properties of zero knowledge. This is just the verifiability that we're talking about mostly. I think verifiable computation, of which like zero knowledge proofs are one way of implementing that. I think there's just going to be like a huge market even beyond crypto. And I think Sindri is doing a fantastic job sort of capturing that wave and being early there and just building phenomenal products. So I would say, like, we've seen zero knowledge for many, many years. This is the first investment we've made here. We have a lot of conviction what they're doing. Stacia, the CEO, was actually just on our podcast, which we'll launch shortly. So that's one area. Another area I'm really interested in is like general MPC, because when I think about, for example, problems like private AI inference, right? This is actually not something that you can solve with ZK. You actually need more sophisticated, different technologies for that. This MPC approach seems like it could be one of those things. I'm doing like a lot of work there. Let's see what else. And I mean, I think the other stuff is boring but necessary. Like we're in this year right now where, think about it, we've had a Bitcoin ETF in January, signed off by the SEC themselves. We just had our Ethereum ETF. We've had BlackRock partner with Securitize, which is kind of could say it's a Miami deal here. You have BlackRock talking about a instant settlement stock exchange. Like, I don't think that's registered in most people's minds. Like, if BlackRock, do you remember what happened when TD Ameritrade or whoever, like one of those brokers, they dropped their fees to zero? Do you remember what happened?
Was that?
It was like 5 years ago or something, where like
I remember Robinhood doing it.
Right. Well, like as soon as one person, one enterprise in that comp set like drops their fees to zero, everyone else has to instantly do it. So like I don't think people are like registering the fact that if like BlackRock can make stock trading go on a blockchain and suddenly the fees of that become zero and not like $10 for, retail people, everyone on Wall Street is going to have to go compete with that, right? And so what does that mean for modular blockchains, for Solana, for different kinds of like supply side blockchain technologies? Like who are they going to be picked? Like there could be just like a flood of demand side interest just on that, right? But my overarching point is like these are all kind of boring institutional, regulatory acceptance is happening, right? Government acceptance is happening. Donald Trump has declared that he's crypto friendly. That will lead to an environment where it's going to be much more productive to be a crypto founder, to raise money. The rules of the road will be much better defined. And I think ultimately that's going to enable consumer adoption at scale.
So we're not bullish enough on the industry.
We're not bullish enough. No.
Maybe another thing that we're not bullish enough on is Miami.
Yes.
You've been speaking a lot about Miami. Coinfund does phenomenal get-togethers in Miami. Hundreds of people show up, talk all things crypto. What gets you excited about the Miami ecosystem?
So I'm like an early adopter of stuff. So when I heard in 2020, 2021 that Miami was sort of fixing to be a crypto city, I was like, I gotta come down here and see for myself. My wife and I ended up moving down here, getting a place here. And to be honest, like in May of 21, like there weren't a ton of entrepreneurs here. There were kind of crypto curious people. A lot of them were all about trading NFTs and tokens and stuff. And it was a little bit of like a letdown, but I have to say, over the last 3 years of being here, there's like 12 crypto funds, including Coinfund and Frictionless, who are down here. There's a lot of traditional tech VCs down here. There's more and more crypto community. Like we get, to your point, we probably get like 350 signups per happy hour that we do. Sign up in October when we come back. We're also starting to see more engineers. Like the fundamental problem with Miami is that we don't really have a university here that like Stanford or something like that graduates technology people. They have to be imported, but it feels like more and more engineers are coming down here from New York, from SF, from LATAM, and I'm starting to see like engineering meetups. So if you ask me, like on a 5 to 10 year horizon, I'm buying a house here, by the way, so I'm biased, but on a 5 to 10 year horizon, I think that Miami will be a phenomenal city to do tech in. There's going to be a lot of investor activity, founder activity, tech, meetups, and it's just like a wonderful environment, to work with a team here. So
it definitely feels like it's on the upswing. Buildings getting built. The streets are clean. You have the sunshine. I think whether you were an investor or an engineer, and in the crypto industry, you probably spend too much time on the computer. Being able to go outside, get the sunshine, be able to walk, it's really nice.
It's really nice. And look, to your point, like there's construction everywhere. Apple just got a new office in Coral Gables, which is like mind-boggling. What's that Wall Street firm that's building
Citadel?
Yeah, sorry. Thank you. Citadel is building a whole building here, which also, by the way, means that a lot of affluent Citadel employees are moving to Miami, like with
buy all the real estate in Pinecrest and Coral Gables.
That's right, and taking up space in the schools and stuff, right? So you can see how there's going to be more and more and more sort of development like over time. So look, if you're a crypto founder, come early adopt the Miami community. That's my pitch to you. There's all kinds of great stuff going on here.
And I will echo that sentiment. It's a great place to live. Yeah. As we're wrapping up, anything that we didn't touch upon, or any tidbits you want to share, or Coinfund life, any wisdom?
Well, I'll just say that I've had like an incredible journey in crypto. It's been a wild ride. And, back when Ethereum launched that July 30th, 2015, we were like, oh, well, we just got to wait a little while. And, summer of 2016, we'll have decentralized apps going mainstream and it'll be great. It will be like, we'll be out there. The New York Times will be writing about it. Obviously, that's taken a lot longer. It's taken like 10 times longer. But there's a certain reality, I think, to the space where like people are very, very dedicated to it. There are people who have been there from those times till now, building toward this vision. And I just don't see a world where this stops. I think the values of Web3 will keep going, and we're about to have some of the biggest adoption events that we've seen. So it's actually a very good time to be a manager and a founder and an investor like in this industry. So I'm just super happy about that.
Awesome. We'll end it on that. Jake, thank you so much. Really appreciate you coming on the podcast. Appreciate all your wisdom, and wish you and Coinfund the most success. You guys have been doing a great job and great stewards for the industry.
Cheers, Logan. Thanks for having us.
Thank you.